All right, everyone, let's get going. 5 o'clock. Let me just take a moment this time. As always, I'm starting right at 5. And let me just take a minute because over time, there's a lot of new people that come around, like Vic, for example. It wasn't because Vic said hi, but, there are people constantly joining. A lot of people, again, I don't really, do any advertising or anything, but word gets around and, I put a lot of stuff on YouTube that it seems like most people come from YouTube. But after time, I know a lot of you have known me for a long time, and some of you have known me over the last couple of years. And oh, by the way, this is DTS's third year anniversary. Of course, I've been around a little bit longer than that, but my own company, DTS, 3 years. I forgot the date, right around now sometime. I don't make a big deal out of it, but yeah, thanks. And let me just step back and just say hi to some of you who don't know me that well, because I never go through an introduction myself, because I assume most of you know who I am. But I have been at this about 20 years, which I hate to say at this point because it's been a long time. Not that I hate to say I've been trading 20 years, I've loved it, but I mean just that I'm getting old enough that I can say I've done something for 20 years. And just for some of you who don't know me, I was never with the market before. I think that's something that a lot of people are always shocked by. I was never on Wall Street, never been a broker, never been an analyst, never been any of those things. As a matter of fact, when I started 20 years ago, I didn't know a stock from a bond, quite literally. All I had was, I had worked for a company where through my payroll check, bought some of the stock and never really looked at it. I looked at it one day and I was like, oh, it's worth this much. And then I looked at it 6 months later. I go, wow, that really went up in value a lot. This is cool. And then 6 months later, I looked at it again and it was back below where it started. I'm like, well, this this whole stock market thing stinks. And I never thought about it much again. But I ended up getting my own business and then selling that business and had some money but couldn't quite retire. Yada yada yada. And I got interested in the market in a very backwards way through kind of a somebody that, it was Wade Cook. Some of you may have heard of him from a long time ago. It was closer to a scam type of thing than it was anything real, but it got my interest going in the market. And rather than sitting back and saying, oh, gee, this guy is kind of a crook, I got an interest and said, you know what, there is doable stuff to do here. And I went on to learn the market, so to speak. And I came from, well, I don't think unique perspective. I think most of you are in this category of not really knowing much about it. But I went through the process that actually is described in a book called How I Made 2 Million in the Market by Nick Jarvis. It's an interesting book in that he kind of goes through the process many of you and I possibly went through. Well, that I did go through and many of you possibly went through, where he starts off saying, gee, and I went through this the first few months, kind of like, well, gee, it's all about fundamentals, understand companies, understand the economy. And once you do that, you realize firsthand that's just complete garbage. It just doesn't help you at all. As a matter of fact, I went through it and it's just nothing. I remember back in the days where I had actual magazines. Some of you may not know what those are, but they're these things made out of paper and they're bound together and you read them kind of like an internet page, except it's on paper. And I had stacks of magazines on my desk. Yeah, that's what they called them, Wade Crook. Yeah. But that's what got my interest going. He said a line to me. Well, not to me, but I mean, I heard a commercial on the radio that made sense to me because it happened to fit into my life. And he said, all he said to me was this. All he said in his commercial that sold me was this. He said, stocks. If a stock goes up 10% a year, people consider that to be a great investment, right? And he said, do you realize that stocks go up and down 10% every few weeks? They go up, they go down, they go, and they go, why sit there? Why not take the up and get out for the down? And it made a lot of sense to me. And since I had kind of done that, and not that I really tried to own any stocks, but the company that it was at, I got some stock and it just went back to where it was. So I was like, well, this is really stupid. So it made sense to me. It got my interest going anyhow. But bottom line, after time, I came to realize very quickly through my own that the things that you hear in terms of news and economic data and fundamentals, they're just completely worthless to trying to really figure out what you do. I mean, sometimes people feel that it's helpful just because of correlation, not causation. In other words, something goes up, it happened to have had some report or something that came out, and you think, gee, that's what caused it, and it's really not the case at all. And I came to really, really understand how technical analysis is the only concept for the market. And if some of you are offended by that, don't think of it as that anything else is wrong. Think of it as technical analysis encompasses everything else, inputs everything, spits it out, and chews it out, and it is the truth that's out there. So I we had kind of a weird beginning because we actually did pretty good early. I don't know why. I know that's not the case, and I had my issues along the way, but actually I had a good first year of trading. And I started with the company, started teaching people, and really enjoyed that a whole lot. And then 3 years ago, yada, 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 long story short, went off and did my own company. I should have done it a long, long time ago mostly because I really enjoy being able to teach people the correct way. Anytime a bigger company is involved and there's salespeople and there's bills to pay, the objective becomes building a business rather than really helping people. I'm in the position where I really have fun doing this. This is not a business to me. I enjoy helping, and I've trained a lot of people at this point and want to continue to do that, just having fun and continue to do this. So these events that I do every other Wednesday approximately are meant to be educational events. They are not meant to step in and be your actual technical analysis training. For that, you need to actually go get that, which of course is one of the things that I do offer. But in the meantime, I find so many people are in one or two categories that they either want to try to learn it on their own, which I actually admire. I've long ago gave up saying that's foolish because I did it myself. I tried to learn on my own for a while, and eventually I found that to be not the right thing for me. So I encourage you to try to learn on your own. And these are, I think, the free stuff page at DTS is probably the biggest, best source of information anywhere on the internet, of real helpful information. I know that you can find all kinds of definitions and stuff, go look those up, that's fine. But for real useful stuff, I think it's the best that you could have. And if you go to the home page, of course, you can find your way to the free stuff page, but here it is directly. And for those of you who want to keep up on the events that we do, make sure you, again, from the home page of DTS, you can go to the calendar, but make sure that you take a look at that calendar to keep up. And generally, if you're getting the emails, you know we keep you apprised of what's coming up down the road, like tonight's event. You're here because you probably got an email about it. So there's a quick little, what I don't do every time. As a matter of fact, I haven't done it in a long time. So for those of you who have not, been around, well, if you've been around less than 6 months, you probably never heard me say any of that stuff. So there is a little rundown of me and what I am. And I now offer a lot of free stuff at DTS for people who want to learn on their own. Or the other group of people are people that want to really get serious and perhaps take the courses and learn how to do it, but they're not ready yet. And along the way, they do this. And I also very much applaud that if that's what you're doing. So whatever you want, that's great for me, it's fine with me. And in the meantime, I do these presentations. I also have some other events that we do from time to time, and then there are paid for things you can do at DTS. There's a trading room for day trading during the day. There is a long-term trader letter for long-term investing, and then of course there's the seminar program. Okay, you guys can go find all that stuff if you want to on the page, or if you want to look it up. So let's get going for tonight because I spent a few extra minutes doing that. Tonight is going to be a hugely educational event. As a matter of fact, the last one was more of a soft topic thing. And by the way, we had an issue with something, got behind on posting these. So last week, the event from 2 back was posted, and then the event from 2 weeks ago is going to be posted tomorrow, and tonight's event should be posted by the weekend. So we just got a little behind that we normally aren't. Normally, the events on Wednesday are posted at the end of the weekend, not immediately, but 4, 5, 6 days later they're posted, and they're posted on the free stuff page. They're also posted on YouTube. So tonight is going to be a more educational event. As a matter of fact, I haven't really done this format. I think I did it once at DTS a couple years ago. And it's a little bit of I don't want to say confusing, but it's a little more of an intense format. It's going to be a more instructional format and going to be talking specifically about things to look at for day trading. And again, it's kind of a good overview, but it may be confusing if you don't understand all the underlying things that go into it. But I think it'll be very, very helpful for a lot of you. So let's get into it. Here's the intro slide that you were emailed. And I'm just going to skip that because I go into more detail here and a couple other things. This was emailed to you this afternoon, but you probably didn't have a chance to read it. Intraday market analysis is simply applying all the technical analysis you know to a chart of the market. That's all it is. This is for day trading today. Now, again, I like both day trading and long-term trading investing. This is going to be specifically charts about day trading. I'm going to go through the last 2 weeks of charts, so it's going to be a very intense chart session. But all the concepts apply to any time frame you want to look at. In other words, it doesn't matter if you want to apply these to long-term, you just have to change the time frames. It's all the same stuff. That's what it says right here. Just change the time frames of the chart. All else stays the same. It's the same for any stock, Forex, pair, or futures. I have a lot of my students that trade just futures, that trade Forex. It's all the same thing. Don't ever let somebody tell you that you have to take some kind of different course to distinguish between futures and Forex and stocks. It's all the same thing in terms of what really matters, learning how to read a chart, learning technical analysis. And yes, I know there's pips and there's dollars and there's 24 hours and not 24 hours, but none of that matters. I mean, you can learn all that in 5 minutes on the internet. The point is that to make money, to read a chart, it's all the same thing. So it doesn't matter. It doesn't matter what moving averages you use. It doesn't even matter what time frames you actually use, as long as you use a variety of time frames. It's something I'm going to get into tonight. Now, by time frames, I'm talking about a weekly chart where every bar represents a week of the market or whatever you're looking at, a daily chart, an hourly chart, a 15-minute chart, a 5-minute chart, a 1-minute chart, a 2-minute chart. Those are the typical time frames. And what's important is that you always get a cross section of 4 time frames before you make a decision. But as long as you do that, it really doesn't matter what time frames you use. Something very important for those of you that are newer, there is no magic in the market, okay? There is no favorite time frame. There is no, it doesn't matter if you want to use a 3-minute chart and a 21-minute chart and a 72-minute chart, that's perfectly fine with me. I could care less. None of it matters as long as you do some of what I tell you tonight, which is to make sure the time frames align in the proper way, whichever ones you're looking at. And the 4 time frames you're looking at have to be spread out enough. You can't look at a 1, a 5, a 7, and 9-minute chart. That wouldn't make any sense, of course. So it doesn't matter what time frame. It doesn't matter what moving averages. It really doesn't matter if they're exponential or simple. None of this stuff matters because none of it is what you base your decisions on for entering or exiting a trade. There are some good guidelines. I happen to keep moving averages on my chart. There's a specific purpose for them, but they do not determine when I enter or exit something, not directly. And there's no such thing as a magical indicator. There is no indicator that's going to make you money. Let me save you all a lot of time. And even if you don't believe me, now that you've heard the words, when you try to use some of these shortcut methods, you'll understand quicker that it simply doesn't work. When I tell you up front, it simply doesn't work. I would use any of that stuff if it worked. What you have to understand is simply how to read a chart, which is not quite as simple as just plugging in an indicator and making money 3 minutes after you enter the market, but it's also not very complicated. It doesn't require tremendous brain power or intelligence. It's something that really does not involve the brain power of more than a 5th grader. But it does require some diligence, some training, and some discipline. A lot of that was discussed at the last presentation 2 weeks ago, which will be posted in the next couple of days. All right. And by the way, this also serves as the review of the DTS Daily Market Letter, something I used to do more regularly, but I felt it was confusing to people, so I haven't done it all that often. To make this more effective, it will involve a cursory explanation of some of the details of reading charts. The goal is not to complete a full technical analysis class, but the explanations given will be an understanding of the language of charts. The words chosen are very intentional. Market bias we're talking about for intraday trading. Is it just a market bias or is it for trading futures discussed? Well, I think that whatever you're doing as a day trader, and again, not for day trading, if you're long-term investing, understanding the market direction is critical. It is the expressions that you've heard, it's a tide that lifts all boats, whatever expression you like. But if you're trading a market type stock on a normal type day, and you're trading against the flow of the market, you're going to have a very difficult time. Does that make sense to all of you? Just as a common sense English sentence. If you're trading a microchip type of stock, a computer chip stock, and the NASDAQ index is going down, you're going to have a hard time going long unless there's something special about your stock. Does that make sense, everyone? Does that make sense? I'm taking a sip of water, that's why I'm asking. Now, there are some exceptions to that. For every rule, there are some exceptions usually. Number one, you may not be trading a market stock. Oil stocks, gold stocks, typically kind of do their own thing. They're not necessarily revolving around the bigger market. Now, when I say the market, I typically look at either and both the NASDAQ 100 and the S&P 500. S&P 500. The NASDAQ 100 is the ETF. There's a little shortcut symbol for it. I won't go into what that means, but it's basically you're looking, if you're at the QQQ, you're looking at the NASDAQ 100. And if you're looking at the SPY, you probably heard these terms, that's the S&P 500. Those two together are what I consider to be the market. Don't look at the Dow for market analysis. It's not the market. It's 30 stocks that are run like a portfolio. As a matter of fact, there's still idiots on TV that are too stupid to know the difference that are still talking about that maybe the market will soon reach its all-time highs. Well, that's the Dow. The QQQ has blown past its all-time highs months ago, and the SPY has surpassed its all-time high as well. That's what matters. The Dow is just a subset of those. But when the importance of having a market bias is critical for trading stocks. And naturally, if you're trading the market, it is what you're doing, right? So this kind of class, if you will, tonight, this education tonight, is exactly what you would be doing if you're trading the futures. Now, the futures are just another way of trading the market, for those of you who don't understand. If you want to trade the market long, if you want to trade the QQ long, you'd be trading the NQ futures. So if you're trading the market itself, naturally, you have to appreciate and understand the technical analysis of the market. Now, for me, I like trading the futures sometimes, but my main focus, I like to trade equities, to trade stocks. But when I trade stocks, I place a huge emphasis on having a market bias. So I go through and analyze the market and determine where the market's going to go, and then try to coordinate or time, if you will, my entries to equities most of the time. During these charts we're going to look at, I actually did take a futures trade. It was a short one day, but most of the time I feel there is an advantage that can be had by finding where the market's going to be going, and then when the market, for example, hits a support level and you want to be long, to go long a strong stock rather than the market. Does that general concept make sense to all of you? It's not exactly a full class understanding of what that means, but it just in English language, does that make sense to you? That if you understand where the market's going and then you kind of superimpose that to help you time your entries for stocks, I feel it gives you a double-edged advantage. Because number one, you may go long the market and be wrong about the market. You know, you may be just a little bit off. You may think there's a support area. The market drops the support area, you go long, you stop out, and then later you turn out to be right, but you're out of money. It's quite possible that the stock you're looking at, because you're playing a stock, maybe the stock had a pattern like this. And you got in here, and when the market did this, your stock didn't do anything. Therefore, you avoided a stop out because you're playing something that gives you some buffer, if that makes sense. And likewise, if everything does work, perhaps your stock will have even a much bigger move. I wish I could show you some examples of that from today's trading, because today was a great example of showing you some of that, but unfortunately we can't do everything, and this is about, I already have a full thing on the agenda for today. So critically important to me, and I can't tell you the number of times that somebody I'm training will come up at some point and say, you know, wow, I just really realized yesterday what a big deal that is that you talk about, that if you're trying to go long in a down market, you're just not going to get any traction unless you're trading the other exception, and that is occasionally stocks go quote unquote on their own page. This typically happens when something gaps. If you look at a stock that gaps up, look at, well, the whole market was up today. And I don't have any great examples of things that fell, but stocks that gap up like Roku today, ROKU, or WDAY, these things kind of go on their own page. They don't follow the market. CRM, yeah, that was something we had on the screen today. because they're just in a special situation where something happens, they had their earnings, they announce something good or bad, and nobody cares about the rest of the market because they have to deal with their stock, that stock, whether they own it or want to own it. I want to, since we are talking about day trading here today, and I usually throw these slides at the end, I just want to, and so many people when they see these, they're like, wow, why didn't I see those before? And I've been showing them for like 2 years. But for those of you who do want to day trade but don't have the ability, the capital because of the day trader rule, you can do something called prop trading. Now, I am not directly involved with this. Where is it here? But to help people who want to do this, I have a company I refer people to that has been excellent. And if you want to just go read about it, there's a thing on the DTS site that explains it in detail. You can read about it. I don't want to take any time here, but it allows you to day trade. If you put up $5,000, you could trade $50,000 worth of equity in and out as much as you want. You could be trading in 2 days. There's no levels, there's no hoops, there's no rules, there's no tests. It's set up very nice. Your money's safe, and it's a perfect combination of things. So if you want information on that, you do have to email me to get additional information and referral to the place. Okay, and my email is this. So normally I throw that in at the end. Most people are gone, and people keep saying, "Wow, I didn't know you had that," and we do. So there we go. All right, I sent you a little enticer, it was called, earlier this morning, and it was going to be this slide here. Is the daily chart needed for intraday analysis? Or here's the question I'd like you to answer. Can you take an intraday short position with this daily chart? Here is the daily chart of the QQQ. I typically look at this first to be the market for several reasons, not important right now. Here's the daily chart of the QQQ up through yesterday. If you're day trading and this is the market environment, can you short? Does it make sense to short? Yes or no? What do you think? I asked you a question ahead of time, so give me your answers, comments, whatever you want. We're talking about, by the way, that is a very impressive, extremely strong, tight, powerful, uptrending market. This market won't let anything drop. So this is a very, very strong daily chart. The rest of you, getting close to 100 people, what do you think? I sent this to you as a question. Can you, as a day trader, this is a daily chart, can you short stocks? Does it make sense? In other words, when I teach, would I teach somebody, hey, yeah, we can short today. It's okay. I know the market's up, but we can short. Do I think that's okay? Yeah. Um, Dev, I'm not sure what risky means in that vernacular that you use it. I kind of always have a problem people use that word because it has so many different meanings. Do you mean it's like you're less odds of a trade? Well, when I go through it, I think you'll kind of get it on very special setups. Okay. The answer to the question is a very definitive yes, absolutely. In layman's terms, I mean, just for one simple view of this in layman's terms, the time frame is just too far away. But it may depend a little bit on if you're kind of an all-day trader or if you're more of a scalper type thing. Whatever you are as a day trader, and here's one of the most important rules that I could teach you, that I teach the seminar people that I'm sharing with you here, we talk about in the room a lot. Whatever you are, if you're day trading, the 60-minute chart is the parent chart. It's one of the words I like to use. It is the time frame one above the intraday time frame that you would be playing as a day trader, meaning the 1, 2, 5, 15-minute chart. It must complement the trade if I had to pick a word for this presentation. So the 60-minute chart has to be perfectly in line with what you're doing. It is the guide, it is the parent, it is the overseeing chart. Okay. However, the daily chart, this means the daily chart is now 2 time frames above the time frame we care about. Meaning, if I'm trading a 15-minute day trade, a 5-minute day trade, the 60 is my supreme boss. And then the daily chart now is 2 time frames above that, right? And in a simple word, we require something from the time frame 2 time frames above, but we require a little less from it. And it usually must not conflict with the strategy we are playing. This can be a little confusing, but think about a daily chart that's channeling like this. Here's the daily chart. I just added some lines on the top and bottom, and don't read too much into those lines. They don't mean a whole lot. They're just like if you brought your 5-year-old child in the room and said, draw some lines around that pattern, that's what they would do. But here's the point very simply, is that you would not want to go long at 1, 2, and 3 any more than you would like to be short at 4, 5, and 6. Does this slide make sense to everyone? And sometimes when I go to teach something like in this format, I'm sometimes thinking, oh, this is like kind of, simple, understand. But then every time I teach this, I get like, wow, like people really catching on to this. So if you have any light bulb moments, let me know. This is a very simple concept, but it's at the very heart of what I think one of the most important things about trading is understanding the relationship between the time frames that you have to know to take a trade. I think most of the traders that have a hard time is they just don't understand this. And this is a very simple concept, right? So I don't care how bullish we are. I don't care how powerful the daily chart is. I'm not going to start going long even as an intraday basis here or here, right? As a matter of fact, anytime I'm working my way up to here, I'm starting to get more and more sensitive to looking for short positions that may drop, right? And just like when you're down here, you wouldn't start shorting things, at least naturally any day, there are special things that present themselves. And that's one answer. Like I said, there's stocks that go on their own page. And it's one of the reasons that one of the things, not the main thing, but one of the things I like to look at are gapping stocks because they go on their own page. You could have the most bullish day in the world, and a stock that gaps down may end up being very bearish and fall all day, regardlessly. So that's one thing that I like is unique things. But even not unique, just generally speaking, when we get down to here, I'm not going to be starting to really look hard for shorts because the market bias is going to flip back to being up because of the daily chart, the one 2 time frames above where I am. So there's a lot of wording that goes into this when you really learn it in class. Everything from complementing to not conflicting to the sweet spot and all these different terms. But basically for today, just you don't want that chart to conflict with what you're doing. And that would be conflicting. To start going long here would be conflicting. And now sometimes you go higher, like right now, we're pushing higher a little bit right at the top of this area here, You got to play what you're given every day and make the best out of it. And today I was actually more long than short, right? Long. No, it was half and half. Yeah. The two nicest winners though were longs. So there's one concept. It says here, just follow the hourly chart. That might be an answer you say. Well, okay, why don't you just follow the hourly chart? Why do you even look at the daily? If the hourly's up, well, then play long. Well, because the hourly chart doesn't continuously go up. For example, let's look at the area between 3 and 6, right? This area right in here, starting right at 3, right? If your attitude was, in other words, I'm addressing the question, Paul, I'm just going to look at one time frame. If the hourly chart's up, I'm just going to play up. That's all there is to it. Well, that'll work in some spots, and then sometimes you get your head handed to you. If that was your attitude, what trend is the hourly chart in right here, everybody? This is a simple question, not meant to be a trick question. What trend is the hourly chart in right there? Uptrend, right? It's in an uptrend. And right here at the end of this red bar, I don't care what you want to call it, but we're coming onto support, we're in a gap fill, we're at the moving average, we're at the the trend line, whatever you want to call it. That is where, if you're telling me you just want to look at an hourly chart, that you would be long, right? But we're not going to be long because that right there, that top is that top right there. So I knew this day, hey, daily chart, top of the channel, I'm not going to be pushing it bullishly today. And then we gap up that day. And to me then, there is no support here because the bigger time frame is saying you're going to fall. And this is the day that I actually, did a futures trade. The only time in the last 2 weeks I took a direct futures trade was just short this move up this morning. And it was a really nice trade. But when we came to there, I didn't get bullish. No way. We fell a lot further through that. And if you remember the picture of the daily chart, we continued to fall then for a while. So this whole concept of time frames and what you need to look at, the total of 4 time frames, to me is a very, very important thing. So what I want to get onto here now is going to be maybe a little confusing, but I'm just going to run through it. And those of you that keep up, great. And if you don't, maybe you'll pull some comments out of it here. What I actually want to do is take you through what I do in the market letter that I do. I'm sorry, when I said there's 3 services, one of the services are the letters. There's 2 letters. There's an intraday letter and there is a long-term letter. The intraday letter is called the DTS Daily Market Letter. And in this letter, part of the function of it is to provide specific market commentary for that day. Also the future days going on, but for that day specifically. So what I do is every day is I go through and I take the charts like you're seeing right here, and I say what's going to happen the next day in very specific language, not generalities. I give you a general market bias for the day, and also, when possible, which is about 80 to 90% of the time, a specific trading recommendation if you are trading the futures directly. If you're not, then you care about the bias in general. Okay? So one of the best things you can do is write down your own. Yeah. Well, Eric, actually, it's funny. I have a little note to myself here on this slide, very specifically saying that I feel there's nothing more important you can do. And as a matter of fact, when during the periods of time that I have not been writing a letter publicly for somebody, I've just been trading on my own, I write myself a letter. Now, obviously, it's not quite as formal, but it is amazing so many times. And you just take a cursory glance at the chart. You may say, okay, that's what's going to happen today, right? But then you go to write it for somebody else. Now, what I'm suggesting is that you write a daily market letter to yourself, kind of like what Eric's saying, even if you don't compare it to me, just to write it for yourself. It's amazing how your view changes sometimes. You say, wait a minute, that's not really right. What's going on here? And I think one of the best things you can do is, before the market opens, is to write a market letter to yourself of exactly what you think is going to happen. Now, some of you may be saying, oh, well, gee, that's kind of silly. I just let the market open and then I just kind of trade what happens. Well, if you have proven to be successful doing that, congratulations. I would tip my hat to you because I don't know anybody that is. It's what I call the tail wagging the dog. If you're going to get in there and you get thrown around by a 1 minute, a 2 minute, a 5 minute chart without the guidance of the bigger time frames, you're going to be losing your butt all the time. So I think it's critically important to have a framework of what's going on in the market every day, to have a framework of saying, look, here's the support levels, here's the parameters, and I'm going to wait for this to happen. I'm going to wait for that to happen. And a big thing I teach when I'm talking about trading, and it doesn't matter if it's long-term or intraday, is that you wait for the stocks to come to you. You don't go chasing stuff. You dictate exactly what you need to see to enter a position, and you wait for it to happen. And to me, that's hugely critical. Now, I have to tell you that a lot of times it's quite difficult to write a letter before the market opens, telling you what's going to happen after we open, because a lot of different variables can occur, of course. And there are some days, about 1 in 10, where I just have to say, you know what, I can't really give a specific play commentary here because there's just too many things that could happen. And actually, I could go on to list, well, if this happens, you do this. If this happens, you do that. But after 12 things, you get sick of reading it. So the majority of the days, there's usually a clear thing that is the predominant trend that should happen that day. So what I want to do here is have a little educational session with you, and this is going to go on for a little bit here. Matter of fact, at some point I'll have to pick it up because we won't have time to do it like I would like to. But what I would actually like to do, I'm going back in time here. So this is about 2 weeks back, the 11th. Here's how the market closed that day. This is the QQQ 60-minute chart. It closed like this. Here's the QQQ daily chart. And what I would like you to say for the next day, what is the bias for tomorrow? Neutral, sideways, too sloppy to predict, up or down. Those are kind of your 4 choices, right? Up, down, sideways, or just too sloppy to even guess. And do you think that it's going to be a clean enough bias that you could actually dictate a trade that you would do right now before the market opens? What do we think tomorrow is? Those are the charts you're looking at. There you go. Up, down. What do you think? And also, if you're saying whatever you're answering, up or down, would you take a trade? Would you say, yeah, here's what I would look for? Could you give me a specific enough thing to say, I'd go long right at the open, period. I'd go long if we gapped above this. I'd go long if the market popped initially, then pulled back, and then made a new high. Down at open. First move lower, up. Okay. Oh, I'm sorry, I forgot to tell you something. On all of these charts, there's a little green dot because there is one other piece of information I have. I send the letter out between 8 and 8:30. I typically know where the market is likely going to be opening, not, based on the future. So this day, the market was projected and did open right about there at that green dot. My apologies. I know all the charts that'll be there. So you don't have to worry about a gap down. It is gapping up this day, right to, I don't know the number. Just visually you can look at it. Okay. Right. The intraday chart is downtrending, right? We're downtrending. But we have kind of this wider bar into what is a bit of a support area. And the daily chart, guess what? The daily chart, which has been nearly perfect, it may shoot a little bit lower than this, but guess what? This morning it's not shooting lower, it's gapping up. So if you want to trade the market, and naturally at 10 o'clock you'll have a better picture because you'll have a chart in front of you. But what I would imagine this day was if we could open, only run up a little bit but not too far, and then kind of stall or pull back, the new high of the day should be a long and we could have a good move. That would be my call for that day. That would be what I think is going to happen. And specifically, as long as it didn't go over this 269 area, then trading above 269 would be a long for the day. That's what I think the analysis is. So what happened the next day? Next day, boom, we gapped up. I'm only showing you the hourly chart because it can get too confusing to bring up a bunch of other charts. But the market did stall under 269 and then took out 269 after 10 o'clock and then had a huge run. That is a huge run. I mean, if you're trading the futures, that's your whole week. If you're trading stocks, you push the button bullishly when this is happening, right? So home run type of thing that day. That's what the daily chart looked like afterwards. What about the next day? Let's continue this process now. What's the advice for the next day? Bullish bias, bearish bias, sideways, too confusing to tell. What do you think? Sideways to bullish, okay. Bullish. So would you go long, Carmen? Would you go long over yesterday's high? If we open and the opening 10 minutes we ran over yesterday's high, would you be long for the day? By the way, while you're analyzing this, I want to point out to you some of the things that I would be looking at. I'd be looking at this. I'd be looking at this. But I'd also be looking at this and that. That's the little 20 period moving average up to the price. I think after a wide bar like that in an uptrend going that strong, my estimation is that the next day would be a neutral type of day. Statistically speaking, it's a very high odds thing. So I think if we try to pop higher, I'd want to short as soon as, it doesn't matter if you're over this or not, as soon as the intraday uptrend 2-minute chart, 5-minute chart breaks. So any attempt to rally that day, I would short because it's not going to sustain a move higher. You very rarely get two blowout green bars in a row in a tight uptrend. Take a look. Look at the chart. Where can you go to get this information? Well, take a look. Boom, boom, boom. A couple of days we gapped up after the green bar, but not two big green bars in a row. It just doesn't happen very often. Why? Well, because you exhaust your buyers. Everybody looks around. There's some profit taking. We stall. We wait. There's sellers. So, but on the other hand, this is igniting a daily chart move. So on the other hand, if we were to fall, I'd want to buy any little dip in here. As a matter of fact, this is actually a beautiful minor support area. And any little morning little blip, any little morning, what we would call a shakeout type of thing, would be buyable. So that would be my advice for the next day. So what happens the next day? Well, the next day, we ran up, right? Right up in here, the 5-minute uptrend broke, and the short captured the move from here to here. Turns out to be the best trade you could have done that day. You could have gone long, but there wasn't as much move as there was short. And here's the problem also. Going long has its problems because I don't know, and listen to this carefully, I don't know that we would run higher or how high. It could have opened and just collapsed. I do know, however, if we run up all morning, I do know we're going to fall because of this hourly chart. The hourly chart is like magic sometimes. Let's do one more day and then we're going to take a pause before we continue because I want to ask you something. Oh, no. Yep. What's going to happen the next day? So here we are, we close like this, daily chart looks like this, hourly chart looks like this. What's the bias for the next day? Are we short bias because we're running into the prior daily high? Are we long bias because we're in an uptrend? What are we doing for the next day? Why bearish, Vic? Long, remain bullish. Long, long, long. Me too. There's bullish and bearish in Carmen's me too. Neutral. Sideways. Short bias instant. Okay. Is the prior high, Vic, in a daily uptrend, is that resistance? I don't know, I'm asking. Is that resistance? Well, if you're in an uptrend, Vic, there's a lot of definitions for uptrends, some better than others, but by definition, doesn't it mean that you're making a higher high? Isn't that the very definition of an uptrend? If you look at the daily chart here, every prior high was taken out. As a matter of fact, you can't be in an uptrend unless you, so if by definition, you're guaranteed to get above the prior high, how can we call that resistance? Does that make sense? I understand what you're saying, and I understand it is what I call a focal area, but I want you to understand that the prior highs and uptrends are not really resistance. They're stall points, they're focal areas. Because what does it mean to be resistance? It means you think there's sellers there, and the question is, why are there sellers there? Well, there's, in the vast sea of money, there's just a handful of dollars that are what we call self-fulfilling prophecy. You look to the left, you say something's there, but the real money is not reacting to that stuff. And you can see that it's by definition right there on the chart. But let me stop for a minute. So on these 3 days, I gave you my call, my prediction, if you will, and it was spot on. So is that impressive to you? Is that impressive to you that I explained these 3 days in the market and they were just absolutely positively right on? Is that impressive? Well, your answer should be no, it's not impressive. Because, and I want you to be aware of this, especially, a lot of you are probably making rounds and listening to a lot of people, which is great, but you should not be impressive. Well, it's not the sample's too small, Vic. I mean, if you want to increase the sample, I do this all the time. It's not the sample, it's the issue. The issue is, Vic, this is all past tense, right? I mean, anybody can pull up charts from a week ago, see what happened, and then say, well, here's the reason that happened, the osmosis indicator on the reverse hydroxy, blah, 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 and, who knows, right? So it's not impressive to tell you. I mean, it may be impressive to say, here's the reasons, and you look and you say, yeah, but you know what? I can find you charts where they followed some stupid indicator. And if I just picked out those charts and explained to you after the fact, you'd be, wow, that's really an impressive indicator, right? That's not what it's about, right? What would be impressive, though, is if I had those exact comments before the market opened each of those days. Now, that would be impressive, right? And of course, you know what I'm going to say next. Yeah, that's the setup, yeah. What I'm going to say next is that is exactly what you're going to see here. So let's go back to the first day. You mean like I'm doing it now, Peter? Yeah. So let's go back to the 11th here. Right, Vic. And I just want to make you aware, I mean, I'm not really trying to be funny, but, looking at old charts, anybody can explain to you, what they could be totally crazy. Well, here the Steelers beat the 49ers on this day, so therefore the market rallied. I mean, it could all be just garbage in past tense. And sure, I'm sure I sound impressive like I know what I'm talking about, but the point is, can you actually do this beforehand? Can you actually predict this stuff? So that's what I want to show you here, because you might guess right now that these comments that I said. So here's this first day where I said, well, with this gap up, if we could stall, the new high is along and stick with it for the day. Well, here's the wording. Now, this is not what the letter looks like. I just copied and pasted it. And I don't know, I'm not going to read all of these for every day, but here's the paragraph explaining what's going on, and then here's the call for the day. So, and actually I have to look somewhere else because that's too small for me to read. This is a tricky day as we have the SPY with a recently strong daily chart that put in its first significant red bar in a while. The QQQ is showing its third red bar and actually has pulled back to a daily uptrend area. If it's going to maintain a strong daily uptrend, this is perhaps just a sector rotation at its extreme with the QQQ showing a slightly stronger, I'm reading through here. Opening this morning, it is quite likely we see the power switch back to the QQQ. It is too aggressive to be long out of the gates this morning in the QQQ, but if we hold this gap up for 30 minutes, the new high would be the place to be long. It would not surprise me to see another red bar, but it'll be difficult to predict that would happen ahead of time. So here's the bottom line call. With the market currently gapping to 267.50, the market at the high of the day is below 269 at 10 o'clock. The new high of the day is the long for the day. So this went out before the market opened that day. Okay? And this is a letter that goes to a lot of people. So I'm not making this up. Some of you get this letter. Eric gets a letter. So that's what it says ahead of time. And that's where it gets impressive, not saying it to brag, but just to say this stuff is, and I do this right most of the time. Now, occasionally it's wrong, and occasionally I say I don't know, but it's very, very accurate. And then the next day, then I give a little review of the prior day's analysis, and it's kind of jokingly says above it, even though it's a self-review or whatever, it's objective as possible. But the next day review, home run. And then it just gives a quote of the pertinent line from the day before. So this was a home run. If you traded the futures that day, you made your whole week. If you're trading stocks, you had the right bias at the right time, everything good. So then we go to the next day, right? What's going to happen the next day? I said, well, I said to you, after looking at the chart, knowing what's going to happen, if we run up that morning, I would short the break of the uptrend. Well, was that a good call? Well, here's what the letter said. We have a flat opening this morning and an extended hourly chart. I suspect the morning will be mostly sideways, digesting yesterday's strong move up, and then to grind higher this afternoon. There's no clear support. Oh, it got cut off here. Are you missing some of this? The 5 or 15. Well, I'm not having some got cut off. But anyways, it was the perfect call. It was a narrow day, but still captured the entire move. Long, you took profits before the afternoon selling. So that was, again, the call in there had the day right. I'm sorry, I messed up the slide there somehow. I pasted the wrong day in there or something because it doesn't make any sense. The next day, this is the last one that I asked you about. Said it'd be a narrow sideways day. What did the letter say ahead of time? If you rally initially, trading about 275 means the break of the 2-minute uptrend is short. If we drop, then the buy setup's a long. So here we're saying we're going to be sandwiched. If we try to rally, we're going to short. If we try and drop, we go long. In other words, we're going to be a sideways day. Perfect call for the day, no play trigger. And this is what happens sometimes. In other words, we had such a narrow sideways day, there's nothing that triggered, which is a good thing. In other words, you don't want to go long and get stopped out or go short and stopped out. So if we would have rallied a little bit more, the play would have been a short. It would have made money, but we never rallied enough to be short. We never dropped enough to be long. It was a sideways day. And by the way, that's an important concept also. When to just kind of lay low, when to know, hey, the odds are not great today. We have too many conflicting things. I don't have the same odds that I feel that I should have. Does this make sense, the flow that I'm doing, everybody? I have 2 whole weeks here. And I don't want to go, as I'm doing this, I don't want to go through the whole 2 weeks, right? But let me go through a couple of important days here. So now we're up in here. The next day we had gapped up, and the call was here. It's very important in this environment. I actually believe that any environment to play the range of the day, you get on bullishly near the low, get on bearishly near the high. I'll see a breakout go very far. Oh, here, if the market opens below 273.50, the opening 5-minute bar is red, the high of the day is a long. Guess what? Opening 5-minute bar red, high of the day is a long. Capture that entire day. And there's this little comment, there's something that I'm really big on, is that it's very important to know what kind of day to expect. In other words, is this going to be a turnaround breakout type of day? Do we want to chase the entry long? Or is this going to be a sideways day? It's very important because if it's a sideways day, many times the new high of the day at 10 o'clock or 10:30 or the break of yesterday's high is the shorting opportunity, not the long opportunity. And this is where so many people get beaten up. They play every day to assume that every day is going to be the most bullish day since the War of 1812. And it's just not what happens. 70-80% of the time, the market is more of a sideways, sloppy, coagulating pattern. So people do this, and they go long here, thinking, okay, I'm playing the breakout, but all that happens is they get this. So you have to learn to make your money, first of all, just playing the ranges, the normal stuff that happens every day. A lot of times, a big breakout is hard to get into because when you do that, most of the time they're not going anywhere, and you have to really understand the environment you're in. That's why for a couple of those days, I was big on saying, and this one here, because we gapped up, because we're in an uptrend. So here's all the things that go into this analysis. We're in an uptrend on the daily chart. We've not yet made the new high. We consolidated after the initial move up. We consolidated here really for a half a day, a full day, 2.5 days, and now we're gapping above part of that consolidation. Do we have to clear all of this here? No, we don't have to clear all of this. It doesn't matter at all. We just got to clear some stuff, get a little kickstart going. So that's why this day was a little more aggressive. If the opening 5-minute bar is red, boom, go long, right? So capture the whole day. Um, boom, 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 boom. Now the next day, now the daily chart's getting, into the prior high area, but still not at new highs. What slide am I on? 17. So what do we do the next day? Well, the next day we end up going higher, and the call was here, assuming we open under 276.40. If the opening 5-minute bar is red, then the high of the day is the long. Alternatively, if we open above 276.40, the 5 or 50-minute buy setup that stays above 275.30 is the long. So the only concepts that day were long. And the question was, do we open up here, pull back and go long, or do we open low enough that going long out of the open is the thing to do? Perfect call for the day, capturing the whole day. So you can see by understanding all the techniques, right, getting to know the charts, that you can have a really good read on what's going to happen before the market opens. Now, naturally, once the market opens, we then get in today with a lot more information that can make things even better. I mean, again, people are in the room with me and we analyze all day long the market, the stocks that we're looking at, all that stuff. But for people who just want the letter, it's a one-time thing before the market opens. Boom, here's what to look for. So naturally, once things open, you could possibly find a better entry, a different entry. Sometimes the market ends up gapping to a different area than I projected it would, or than it was at 8 or 8:30. Sometimes numbers, economic numbers come out at 8:30, they change the gap, and it may throw off what's going on. And that's why we'll typically say, hey, if we're gapping between here and here, here's what you do, because I can't always know for sure where the market's going to open. Okay. A couple days later, and again, you get the idea here, and they're all here. And a couple days later, here, no play was given for yesterday. Why? Because we're up here, we're at the top of the daily range, but now we're at the top of the daily range, but we're also still bullish with no sign of breaking down. So there was no play given. It was just, can't tell you before the market opens what to do because I don't know. I'm going to have to figure it out and wing it today myself as well. But what's really important is that you have this structure set up, and naturally as the market opens and things change, you may change your exact focal points, your entries, your exits, whatever it is, but to have that structure to set up to say, hey, the market is too extended to go long out of the open today. And if it drops, here's the area that I want to see hold, and then to go to find your entries. And again, if you're just using it for a bias, it's easier. We don't have to find an exact entry. We just have to say, hey, we want to come down to this level, and then we start looking for the strong stocks. Does that make sense, everyone? I want to save a little time for questions. I think you get the idea of this, and we can go through and continue to go day by day, but it's the same issues. The daily chart, the intraday chart. What are we looking at? Here's all the things we're looking at to determine this, and why, like on a day like this, there's no play given, because in here we're nearing the top of the daily range, because the moving averages are starting to split, because they're splitting, and we're that far above the moving averages. It becomes much lower odds to play long up in here because we're not going to sustain the move. Now occasionally you get that pop. Today's an example. Today we were kind of like that chart right there. That is the chart there for today. That is it. So we stayed really strong today, which is quite an exception. I ended up making my money mostly on the long side today. Actually, really good day today. Only had one symbol only lost money. It was a short on Amarin. The rest was a really good day, and they were half long, half short other than that. But the longs made most of the money. So even though I may have a certain bias, I'm also combining that with what stocks are available to me. What are they doing? What are the setups on the stocks? How do I time that with the market? So that's why I think you have kind of an advantage looking at stocks like that. Okay. If you want to read, and I don't normally even get into this stuff, but if you are interested in the letter, you can read all about it right there. Those charts are captured. Those are trade station charts, Vic. Those are trade station charts. Um, the market letter goes through, gives a rating on the market for that day, for the midterm, for the long term. It goes through, and this is exactly the commentary I copied and pasted. This is what it looks like in letters: a daily chart every day, an hourly chart, market commentary, what happened yesterday, outlook for today, review of yesterday's analysis. Besides being very good for making money, it's also good for educationally to understand what's going on and to compare maybe what you do to what I feel should be being done. Numbers for the day, earnings and econ numbers that are coming out, just so you know they're coming out. Watch list, intraday, swing, core watches, all part of this letter. Okay. Questions, comments? I want to kind of try and keep these around 60 minutes. I'm starting to stretch them longer and longer all the time. The daily market is one of the best tools out there. Thanks, Eric. For those of you new or missing the beginning, there's a ton of free information available to you. You're already a member. If you're here, you wouldn't be here. You get invites to all the stuff. Make sure to visit the free stuff page. Tons of information on the free stuff page. There's been new stuff added. You can watch the videos right on the free stuff page if you don't want to get jerked around at YouTube. But feel free. You can go to YouTube. If you sign up at YouTube, you'll get notified when a video comes out. And then if you want to go to the site, it's posted at the site generally about the same time it's at Roosevelt. Okay. Thanks, Paul. The last presentation I did was about the three-legged stool, and that will be posted in the next day or two. If you didn't see that one, I suggest you see that one. Those of you that are new and don't know about the free stuff page, I'm getting like every 2-3 days now, I'm getting somebody emailing saying, wow, I just spent the whole weekend viewing the free stuff page, so get over there and see it. Given the candle and the QQQ, one of the largest, I assume you'll not be looking to buy. Correct. Tomorrow I'm not going to be looking long. I'm going to be looking for unique short. Depends where we open a lot as well. And luckily on some of these days it's been nice. I think we have a few earnings tomorrow as well. We've had some gaps that help. Sometimes when it's a tough market bias day, that's when I like a gap, because the gaps generally don't really care about the market bias at all, right? Will the market bias eliminate the otherwise good setups if it goes against the bias? Oh, great. So here's a great question by Mario. Will the market bias otherwise a good setup if it goes against the bias? Do you overweight the stock in the market, if at all? So on a pure market stock, Mario, that is not gapping, that is not unique in any way. If I have a bullish setup on M-chip and I have an extremely bearish bias that day in the market, I would override taking the trade on the stock because of the market bias, yes. Now, like all of trading, there's a sliding scale of changing probabilities, right? You start to show me M-chip has a unique pattern, start to show me M-chip has not been following the market lately, you start to show me that M-chip is gapping up that day, start to show me my market bias is not all that strong, right? You have a great question, by the way. And by the way, Mario, sometimes I follow that rule to my detriment. It's one of the things that I guess you could say I do wrong. I don't know if you want to call it wrong or not, but there are times I pass a trade because of the market bias, and it works. And I'm like, wow, that was the greatest trade of the day. And I said no. And I could be right about the market bias. Maybe the market fell, but this stock just decided to go off on its own for some reason, right? You want to see a good example, Mario, of that? You guys got a second? Let me pull up the charts, because you're saying it, and I just happen to have a great example of that right from today. Exactly what you're talking about. And today I did it, though. Today I went with it. No, I didn't even have Netflix on the screen today. Here's just my little day trading screen real quick. But this was a stock that, based on the market bias, I'm like, I can't go long this right now. But I did, because the individual setup, two things. The individual setup of the stock, number one. Number two, even though the market was extended, I didn't think it was going to drop. And number three, I know this stock sometimes doesn't follow the market. It's right here. It's on the screen. It's, wait a minute. Do you have charts up? Charts. Boom. Boom. Okay, there's live charts right there. It was KR, right? So to Mario's question, Here's a QQQ at noon, right? Look at it. Like off the chart, crazy, nuts, what's wrong with you market? Do you ever going to drop? QQQ at noon. Yes, we ended up staying strong, but I look at the chart on the market. Guess what? I don't have a bullish bias, right? I maybe don't want to short, but I don't have a bullish bias, right? I'm not going to start going long. But guess what? One of the things I kept on my screen, I keep all these thumbnails up, was KR. And KR was a favorite concept to me because of this. Look at the daily chart of KR. You can't ask for a better support area because you're on minor support and went sideways long enough to kind of come into that little timing indicator there, that blue line. And then the hourly charts is this perfect support area, right? And then here comes KR. Let's get down to a smaller time frame. KR comes down and boom, I went long on the failed sell setup right there, right? So there's a case where check with the market bias. Mr. Market Bias, can I go long? And the market bias says, hell no, you're an idiot. I said, well, I don't care because this setup is just too perfect. And back in my mind, you know what I know? I know KR. I have it on the screen a lot. It just doesn't tend to follow the market for a reason. I don't know why. It's a food store. The others do. It's just doing its own thing. It's not counter market. It just does its own thing. So it turned out to be really the trade of the afternoon. I think it was my best trade today. No, it wasn't the best trade. It was the second best trade, but it was a good trade. Uber similar, we discussed. Yeah, right. Yeah, Uber actually, and I had Uber. Wasn't Uber on one of my lists here today? Uber right there. Yeah, see, Uber is on my list, on my daily list. Yeah, I did. I didn't pick this one up though. Why didn't I? Probably because I was just looking at other stuff. You know why, Mario? Because it had gapped down. I had no indication to know it was going to blast off like that, and I was looking at other stuff. So yeah, okay. Vic, for day trading, I just do stocks. I don't. I'm not going to say you can't do options. I don't think it's a good idea. If leverage is the issue, I suggest you look into a prop account like I talked about, where you can take $5,000 and trade $50,000 worth of stocks in and out all you want to. Options, there's some you can, but most of them you just lose too much in and out because, especially if you're buying like a gap or something, the premium goes up and they cost too much and you spend too much trying to get them. I just want to play the stock. Longer term, there's a lot of good option strategies you can do, but for day trading, I don't suggest it. Right. Yeah, on a good stock, the spreads aren't necessarily terrible, but the volatility, when something pops, if something pops a nickel, you buy the stock, you're paying the nickel. But if it pops with the option, sometimes you're not just paying the equivalent of the nickel, you're paying the equivalent of the nickel times 3 because of the volatility that goes up, So the thing with options is you don't want to be paying for that volatility. You want to be selling the volatility all the time. All right. All right, guys. Any other questions? As usual, those of you who are new, feel free to email me if you have any questions. You send me a couple of trade things if you want to. On the services page, there's a little area you can sign up for a little chat if you want to have a little session, whatever. Otherwise, guys, there's nothing going on. Is Labor Day's coming up, right? Yeah, this is it, guys, until Labor Day. So the next thing I'm going to be doing is going to be teaching class on the 11th. The next seminar program starts up on the 12th. Well, actually, the 11th is the Friday class. The Friday class, by the way, again, if you're new, you're all invited to that. There's a Friday afternoon class that lasts about 5 hours. I invite all the members to that, but then Saturdays starts the paid-for seminar program. And then that following week, the 16th, will be the next presentation. I have a couple, 3 I want to do. I already have started written up. But I'm taking a little vacation time over Labor Day and won't be doing anything until after Labor Day. Okay, guys? Thanks, everybody. Have a great evening. And those in the room, I'll see you in the morning. Take care, guys.